Hi, my name is Erin Hendrick. I am a shareholder here at Kirkring Barbario. With the passing of the One Big Beautiful Bill Act, tax changes are on the horizon, and in some cases, they are retroactive to the beginning of 2025. The One Big Beautiful Bill Act includes extensions of existing provisions as well as some completely new provisions. Today, we are going to discuss the update to the Section 163J Business Interest Limitations. Now, I would like to introduce my colleague Dawn to talk to you about these updates.
Hi, I'm Dawn Newton, Healthcare Tax Manager at Kirkering Barbario. Today, I'm going to share Section 163J updates to business interest limitations under the One Big Beautiful Bill Act, abbreviated OB3A, and what it could mean for your business. What are the 2022 through 2024 business interest limitations under Section 163J? Generally, the business interest expense deduction is limited to the sum of business interest income, floor plan financing interest for dealers, 30% of adjusted taxable income, abbreviated ATI. The ATI calculation starts with taxable income and subtracts business interest income and floor plan financing interest, since those amounts are included separately. Then it adds back business interest expense, net operating loss deductions, and qualified business income deductions under Section 199A. Disallowed interest is carried forward indefinitely to be used in future years. Who is required to apply these rules and who is exempt? Companies which are required to apply the interest deduction limitations under Section 163J include corporations, partnerships, and LLCs with average annual gross receipts exceeding $30 million. This amount is indexed annually for inflation, and tax shelters who are prohibited from using the cash receipts and disbursements method of accounting are also required to use these rules. Companies which are exempt from these rules include small businesses with average annual gross receipts less than 30 million, certain regulated public utilities, and certain real property and farming businesses that elect out, but they must use ADS depreciation instead of maker's depreciation as a result of their election. Now that you know the current Section 163J limitations and which companies are required to apply these limitations, what updates to 163J limitations are effective starting in 2025? The first update effective in 2025 is the calculation of adjusted taxable income, abbreviated ATI. For tax years beginning in 2022 through 2024, the ATI calculation excluded the depreciation, depletion, and amortization add-backs, resulting in a tighter limitation base. The OB3A restores the depreciation, depletion, and amortization add-backs, bringing the ATI calculation closer to an EBITDA basis. This restoration increases the ATI base and thus increases the deductible business interest allowance, resulting in a more favorable tax treatment for most taxpayers. The updated ATI calculation also excludes certain international tax items. OB3A expands the definition of exempt floor plan financing interest to include trailers and campers, and also clarifies how partnerships and S corporations allocate disallowed interest to owners. What updates were made to the tax treatment of electively capitalized interest starting in 2026? Businesses that previously elected to capitalize interest, such as real property or farming businesses, must include capitalized interest amounts in the 163J deduction limitation before including any business interest which would otherwise be expensed by the company prior to the limitation. This effectively removes a planning strategy to electively capitalize interest, which previously allowed some businesses to optimize interest expense deductions. The OB3A introduces flexibility to revoke or modify prior elections a company may have in place with IRS consent. There are also new safe harbor methods for allocating capitalized interest across projects. What steps should businesses take to prepare for these changes? Model the impact of revised 163J limitation on projected taxable income. Review elections for real property or farming businesses to determine if revocation or modification is beneficial. Update financial reporting systems to track business interest expense carry forwards, and capitalized interest under the new rules. Communicate with lenders if limitations are expected to affect after-tax cash flows, and consult your CPA to ensure compliance and maximize deductions under the new framework. If you have questions around Section 163J business interest limitations, please contact your Kerkering Barbario representative or Aaron Hendrick. You may also visit our website for a full list of resources related to the One Big Beautiful Bill at kbgroup.com. Thank you.